Looking forward to the
Yeah.
chat, man. You guys want to kind of kick us off? Give us a little background, intro, all that kind of thing for anybody that doesn't know you guys?
Yeah, sounds good. So Chisel was born out of two different companies, Leviathan DataWorks and FinTech Tradecraft. FinTech Tradecraft was our consulting arm, right? But Leviathan DataWorks was the guy that's built all of my startups that I've done since Galileo days, and on the technology side. And so we farmed everything off, and we were like, why are we not combining these companies and building a technology company that Sherpas everybody through the FinTech launchpad process, right? So it was born last year, just to kind of revolutionize how things are being done. I know you and I and both of you guys have talked to us about. We've talked to each other about the banking as a service middleware providers, and we never understood that model. We didn't know how it was ever going to work, and that's kind of why we formed Chisel. Was we believe that, hey, these companies that are coming in wanting to have to be fintechs or wanting to have a payments arm or diversify the revenue, they need somebody and experts, and they're hiring consultants for compliance, and they're hiring them for processors, and then hiring them for banks. And we have all of that, but they also need to build, and so they got years and years to start hiring these people to build it. We said we can build it. We have a core now, but we can customize everything in your environment. So the banks directly, you know, contract with them, and the processors directly contract with them. But we're their in-house program management, right? And the technology builds for them. So my background is, I started my career at Discover Card on the phones, taking phone calls so they pay for my college. And I was like, yeah, this is cool. They pay for college. I had no idea I was going to spend the rest of my life in fintech. But I moved up fairly quickly. I was there about 6 years, and I ended up over at GE Capital Financial, the bank charter out of Utah, LC charter. We did corporate cards, small and large corporations, and we really got on the map with a lot of that. And we were evaluating processors back then, and that's where I met Clay and Dave Wilkes at Galileo. They were just starting out. In fact, their data center was a single server rack in a glass case in the lobby. And we were at GE. We're like, yeah, you can't do that, man. You gotta. So Scott Johnson joined them, and a couple of years later, I always wanted to be a part of a startup, so I joined them. I was employee like 17 or something, and I was the first operations lead and the first operations executive, and I was there about 6, 7 years and built all their operations apps, disputes, chargebacks, fraud prevention, investigations, and all of servicing for all their clients. And that was actually a fun place to be. It was the hardest thing I've ever done, building a processor. You guys all know that. It's tough.
Okay.
But you really get to meet everybody and learn a lot more. And since then, I've done nothing but fintech startups up until FinTech Tradecraft and Chisel kind of merged. And this is my own startup. So I've been building since, Pomelo was the last one that I built. And then before that, we could go through a couple others. But I've been on all four sides of this world, of the sponsorship world: the bank, the network, the processor, and the fintech. So,
That's what I
Tyler.
call Darin. No, I call Darin the unicorn, right?
I was just to say he's probably the only unicorn I've ever met.
Yeah.
He's still I've never met anyone in this industry that's actually been on all four sides.
And
So
I don't think I've met anybody who is at least smart enough that they would even begin to claim that they know all four sides. I definitely would never claim it, right? I'm mediocre, maybe at the four, uh, but I'm not good at any of them. How about that?
yeah,
Yeah, nobody is. There's too much.
Well, you guys are
yeah.
doing a great service for banks, and that's where Tyler came from. I mean, the community bank world. Tell him.
No, I mean that we've chatted, but I came and you guys have had Eric Sprink, the CEO of Coastal Community Bank, on. I was Eric. My claim to fame is I'm the longest tenured employee that's ever worked with Eric. So I was 18 years at Coastal Community Bank. The last 5 years had a front row seat watching them stand up their banking as a service. The good, the bad, the ugly. That is any bank that's getting involved in that It's a tough industry to figure out. It's fast paced. You have to be willing to, pivot and move and learn and start again. And that's okay. It's okay to admit, hey, maybe we made a mistake and pivot. And I think the thing that I saw, especially being at a bank, bankers typically are slow to change. And then they're slow to recognize if they made a mistake and want to have to pivot again. And I think you just have to have a willingness and ability to say, hey, I want to learn and I want to pivot and I'm willing to make a mistake and right, all within guardrails. Look, bankers are risk managers by trade. So I'm not saying throw the baby out with the bathwater. I'm just saying you have to be willing to experiment and try and see if it'll work and not work and fit within your comfort. So, but no, Coastal was awesome. I got an opportunity to see every kind of lending product launch. I got the opportunity to start their credit division. So it's a chief credit officer there of their banking as a service. So it was mind blowing for me. Look, think of a 25-year commercial banker, and then all of a sudden you get thrown into this industry and you're like, what? So it was, Darin has always said, you guys confirm this for me, but you've always said, Darin, it is 6 to a year and a half learning curve to even start to get your head around what is going on in this space, right? It's a steep learning, and that's if you're involved trying to learn. If you're just casually thinking about it, it's a long learning
Well,
curve.
and a lot of that learning curve is you have like these aha moments where you realize how stupid you are, right?
Yeah.
And then you have to go back and relearn other things, right?
Yeah.
It's a messy world. And I think, sponsored banking as a service, and now, I mean, in my view, largely the same, but kind of the embedded finance differences, that we're starting to see that are really interesting. You talk about a wild 10 years,
Yeah.
15 even, but it has been big changes. And I think, we've talked before, guys, but when I think back to what a program manager used to be, and then you look at some of the missteps of the middleware providers, and I'm a big fan of direct, right? But
Yeah.
I think what needed to happen was that the program management space needed to evolve.
Yeah.
Sorry,
Yeah.
that word. Whoops. Sorry. No pun intended. Evolve. Anyway, that needed to change a little bit.
It
And
took all of us a minute, but we went, oh yeah.
okay. But the middleware folks, I think what they really solved for that was such a draw to so many banks was the number one question you always hear is, how do I find a fintech? And it's like, you don't even have to raise your hand. They're going to find you.
No.
There's
Yes.
such, right? And that hadn't changed a bit. I think there is more supply and really a supply and demand issue today that is the worst that it's ever been. I mean, there are commercial opportunities absolutely everywhere. We could call
Everywhere.
them fintechs, we could call them brands, modern businesses is one that I hear and like a lot. They are absolutely everywhere looking for sponsors at the moment, and it's just a massive opportunity.
Yeah.
Yeah. Tyler,
yeah,
tell them
so
about the
like
latest trend.
what we've seen is, and it's awesome, we see companies that do stuff, and I'll give you some generic examples that all of a sudden want a payment arm or a money movement or something. So they already have brand awareness, they already have a customer base, they already have loyalty. And all of a sudden they're like, hey, we think it makes sense to pivot because we're outsourcing this piece or our customers are asking us for this. And so those we've had great, Darin, at Chisel, we've had amazing success at finding great companies that want to launch a product, right? A debit
Yeah.
card or whatever, and they're financially sound, they're savvy, they're smart. They know they don't know what they don't know, and so they end up finding us. So they're like, "Yes, come help us," because we admit we're good at whatever, right? We're good at our core business, but we need help in this space. And then taking them to banks from my perspective, like as a banker, I would rather deal with an existing company that wants to launch a product than a fintech that, hey, I have an idea and I'm two guys in a garage and I have $20 million and I think it's going to work and I think I can get customers, right? That's different than businesses that already have a customer base.
Well, I got to say this because you guys help the banks, right? Which we love, because let me tell you something that's happening that I did not expect. We'll have publicly traded companies as clients, which we have a couple, and very large clients that have plenty of cash that they may have 100 developers in-house, and they're saying, we can't derail our roadmap of development. So Chisel, why don't you build the fintech side of this for us, which we love, but then we go out and find the bank that is best fit for them and what the product is going to offer. And what we're finding is the banks aren't used to well-established companies with a lot of cash that are going through due diligence, right?
Yep.
And they'll be checking boxes, and we'll be like, why do you need that? You don't need that. It's publicly traded.
Yes.
Just go grab the information. And they literally are like, I guess that's true. They're just so used to being burned, right?
I've run into these guys where I'm trying to coach bankers behind the scenes. I'm like, somebody just brought you a massive opportunity. Before we get off the phone call, you should be saying yes or no. I know that sounds crazy, but somebody out there will, right?
Yeah.
And
Yeah.
the idea of let's take 3 months of due diligence and we'll get back to you, that's not competitive, not in this day and age, right?
No.
And especially when, I mean, any of us could look at this logo and go, I want that one, right? I'll start a bank to run that logo,
Right.
That is a
Right.
good logo. And so
Yeah.
going through that standard due diligence is too much. And look, there's regulatory issues and everything else and compliance and things that we do for a reason, but we need to streamline that process a little bit on the banking side. There's
Yeah,
so
and
many
they can do it
opportunities.
internally. They just don't. It comes out frustrating to the fintech or the big companies trying to have a fintech arm or a payments arm. They're like, what? We're publicly traded, or we've already proven we have $96 million in cash. So why are they still asking for these things? Well, they're just checking boxes. If they can just step back and logically go, look, we already have all this stuff. Let's just document internally and then move on and not push the issue, right? And it's not that we won't provide it or we won't help them get it. It's just taking time that they don't need to take time with. Right.
Yeah, we've been building our bench out with these banks that are ready, right? And educating them there. We talked to a bank out in Utah, Tanner will tell you, play about a month or so ago, and they have now put together a program that whenever they get these things in, they've used AI, they've used their technology to process procedures, all this stuff and things, and they can decision it in 15 minutes. And so I'm going to this banker going, look, there's too many opportunities out here. You can't take them all. How do we go educate these banks? And that's what we see now is these banks going, oh my God, I get it. So the question is, one, can they get it fast enough? And my gut tells me they're getting there because we're getting more and more banks that's waking up. But if you're listening and you're not woke up, I mean, this is your chance. It's incredible opportunities out there. There's no reason somebody should sell a charter.
It is. That right there is the, I'll just say it, right? That is the dumbest thing I've ever seen. Bankers selling, I mean, it is the greatest time of opportunity. It has to be in, I mean, since the Romans. Like this is the best time in banking ever. And it's just everybody's just opposed for some strange reason or keeping their head down.
Yeah. And I think go ahead, Tyler.
No, go ahead.
I think it's interesting, and I'll bet you Tyler can talk more to this than any of us on this call. I have found as I've watched, when we were building Galileo, and then when I became a fintech and I went through the banks and I had multiple bank partners, I have found, because I worked for a bank, that when they start sponsorship, it inevitably splits in two. There's a payments and future division that is usually hired experts from the outside that have been in here, and then the old school community bank that push against them. And because the compliance team resides in the old school side.
Yes.
Right. And we're like, you guys just get together. We'll help you. Right. But from our side, we're glad you guys are doing what you're doing because it really helps move what we're doing forward. In fact, I have another idea. We'll talk offline with you guys.
Right. Sounds great.
No, I mean, I think it's once a banker understands that new company becomes an arm of them, like that small, like, wait, I can use them as my marketing arm and I get to do what I do, which is what? Oversight, regulation, make sure that they toe the line, but just help them set it up and they're going to sell my product for me. As soon as they understand, they're like, why would you not do this? And
Agreed.
right, and the notion isn't go get everybody, it's go get the ones that you're going to build that you can feel comfortable with and make sure you get your arms around control, right? Because at the end of the day, it is the bank's charter that's at risk, but it's like that's what bankers are. We're risk management mitigators, right? It's
Right.
our whole career is like mitigate these risks. Well, okay, mitigate them.
I'm going to take a
Yeah,
line
no,
out of Tanner's book real quick. I got to take it.
good.
Have we seen a banker get arrested yet? I mean, I know the charters.
No, in fact, when that arrest happened to a bank that won't get named, everybody was like, finally, and then it had nothing to do with this service at all.
Nothing. Yeah, I'm like nobody's been executed, nobody's gone to jail, and yet everyone's terrified of everything and jumping at their own
Yeah.
shadow. Which, look, I'm the biggest fan there is of safety and soundness, and I would say on the technology innovation side, even though that's my world, I look really, really safe and sound and anti-risk compared to most of the technology crowd, right? I have a lot of respect and belief in our banking system and that we don't always have to be the bleeding edge, but there's
Yeah.
some of these opportunities out there that are not the bleeding edge. They're actually pretty simple. And
Yeah.
Yeah.
one that drives me crazy is kind of the passing judgment on something that isn't a product, it's a concept, like
Yeah.
sponsor banking or embedded, and that's not for us. And it's like if somebody brought you, I don't know, $1 gajillion in deposits to do a teen savings card, you wouldn't take that. I mean, is there even
Totally
any risk
safe.
there? Hardly. I
Yeah.
mean,
Yeah.
come on. There's varying scales, I guess, is the point that a lot of folks don't see, and they kind of look at the whole concept as an issue. And it's like, man, I'd be the first one to tell you, I'd be calling you guys, and I specifically asked for Tyler's help if I was going to do anything in lending. That scares me,
Yeah.
man. That's
Yeah.
tough, right?
You know
But
what's
the
crazy
deposit
is
side and the card side, we've got a lot of experience.
yeah, what's crazy is I would say over 50% of our clients coming or potential clients coming are doing credit and lending, and they want sponsored banking, right?
Yep.
So 5 years now, maybe it's been starting to pick up. Before that, it was non-existent.
Yep.
And what's crazy and what I love about that is that is going to be the biggest part of what challenges the big banks.
Agreed.
Because they own their credit, they own their cards, they own everything. They don't sponsor anything out. All of a sudden, there's no longer just neobanking and debit and prepaid and all these that are challenging them. They're challenging the ones that are really lucrative to them, and those community banks can jump on that train.
Here's a weird math problem that I've thought about. When you think about, let's just say the big four, right? Pick a giant logo that they might sponsor for, let's say, a credit card or a debit card or whatever it might be. And let's say that's a Fortune 100 logo. That doesn't make any sense because there's probably a large percentage of those folks that are already their customers.
Yeah.
Oh, shit.
Yeah.
Right? So
yeah.
you talk about a concentration that they have that is an opportunity for every other, certainly community banks, right? I mean, if you looked, I don't know, say a Coinbase, right? You probably don't have a ton of concentration of your customer base there currently. If you could sponsor them, that would be largely net new, awesome. If you were Jamie Dimon doing that, you would erode the heck out of some of your own programs and products, right?
Yeah. Yeah.
It just, wow, what a cool world to live in right now.
Well, it's so cool. It's so cool. And there's so many that are looking at, the trend that Tyler talked about of large companies coming our way. They'll go to the processor, they'll go to the bank, and they'll send them to us because they're like, look, you probably have some really smart people over there, but sponsor banking and fintech and payments is a really detailed industry, and if you really want to launch in the time frame you think you can launch, and it's not even unreasonable, they're just saying, look, we want to launch in 9 months, and startups are like, we want to launch in 2, right? And we want to launch in 9, and the banks are like, yeah, we can launch in 9, but then they start to realize, well, you don't really have anybody that has ever been in this industry, so by the time you hire them and then get it going, it's not going to be 9 months, right? So we accelerate that for them. And then we also take over, the build of the customer experience so that they can customize it on a core that is already established, but we do it all in their environment. The fintech, the big company, the one that wants a payment arm, It's all their environment. It's their code. We're gonna work with them and customize it. We're gonna manage it. But what's great about it, and what comes with all of that, is all of our experience and expertise in launching multiple programs and going through and avoiding those pitfalls. What we always say in the consulting world in this space is they will never know how good they got it if they choose us first.
That's
right?
great.
Because they'll never go through pain. But we are seeing these companies coming back to us saying, we were told 3 months, it's now 14 months, and we have spent $2 million and we don't have a product out. And we're like,
probably like you guys, we've heard that story. Like they get to us and they're just depleted, out of energy, out of money. And they're like, can you help it? We're like, we can help you. And they're like, but we don't have any way to pay you. And I'm like, why did you go 2 years and $2 million and not have anything to show for it? It's mind blowing to me.
Well, and you look at a lot of these, it's there's still a mindset amongst the bankers that, not only how would I find a program, but how would I find a good one or a profitable one? It's like, I haven't seen a startup get launched in the last year, hardly. I mean, maybe onesie twosie. Because you've got a lot of these larger brands that are wanting to do something that are eating up all of the queue or the capacity of the sponsor banks.
Yeah.
Show me a program that is getting sponsored in the last 12 months that isn't awesome. I mean, like, if you're a banker listening right now, if there has been one done that wouldn't be your best commercial customer that you had, I'd be shocked. I mean, that's the level that this is at. It's really shocking. You just come across them. That's why I was saying, if I was the banker on the other end of these phone calls, I would say yes before we got off the call. Just looking, that would be my best commercial client. Yes, I will take them and we'll figure it out.
So not to give any secret sauce, but that was one of the things that Eric was great at Coastal, right? Is if he heard a program and he liked it, he was all in. And then it was like, hey, my people, you figure out how to make it safe. But we're going, right? We're gonna do
first and foremost, if you're thinking about doing these things, call Matthew and Tanner. I mean, my gosh, just get some advice on how to move forward. Even the well-established sponsor experienced banks are throwing us forms that don't even ask the right questions. And so we will either say, hey, we're going to help you guys before we give this to our client. We're going to change the questions up, send it back to you so that you see the question. If you need some more help, Tanner and Matthew, here's their number.
Yeah,
but we got to get moving, right?
Well, we've had some mind-numbing experience with some banks that have been in this space a long time where we're like, how is this even possible? Like, it's interesting, I mean, I think that's the thing is I think you got to keep evolving as a bank.
Well,
I mean, what's the latest thing you've seen with community banks that want to get into sponsorship? What do they fear? Do you know the most?
Matthew talks to, I have no doubt in my mind, especially after the last couple of weeks, Matthew talks to more bankers than anyone alive. Nobody could possibly spend as many hours. So Matthew, what are you hearing?
It's consistent. And I want to go back to what you said that made Eric so successful, Tyler. They're scared of the back office Betty and they're scared of compliance Karen, right? And that we have got to get away from those people, right? And we've got to start creating a culture of yes, right?
Yeah.
Very easily in banking, I can get a room full of no's. That doesn't do me a hill of beans goods, right? I mean, that's awful. You got to get the right team together going, okay, yes, we hear you. How do we go do this in a safe and compliant manner? And we got to let, back office Betty and compliance Karen quit running the bank for us. We got to get in there and control our own destiny. That's where it's at, y'all.
Really well said. I definitely think, I've said this before, and I've got the crazy looks that you can tell people are, And how many times have we all heard about the compliance burden? And in this world, it's actually the compliance advantage, which is the whole reason we have a charter.
Yes.
Like, let's not make this thing a headache. Let's make this thing how we ROI this problem, right?
Yep, exactly. And those banks that want to get into lending, I mean, there are so many opportunities on, owning the receivables, selling the receivables, originations. I mean, it can be, you can participate, not participate in the debt facility. There are so many options, and it's just a matter of doing it properly and correctly. And if you have that streamlined, man, you can really start adding some clients and moving that bank into the stratosphere.
Big time.
Well,
And
I
I think
think
there's a
so.
group, right?
Yeah,
Yeah,
I
yeah.
had this conversation with a very well-respected person in the lending space, specifically business and commercial. And I challenged him. I said, "Hey, 10 years ago, what percentage of loans were going through banks or credit unions, right?" And it's pretty high. And I said, "Do you know what it is today?" And he goes, "No, but I know it's way down." So we did a little chat, Googling, whatever. And the numbers we saw was the number of SMBs and commercial loans going through non FIs, right? I'm not saying there's not an FI behind them, but going through non FIs is huge. And if you think you're going to just keep putting your brand, your community brand out there and continue to get volume, you're missing the boat. That these are the new marketing arms for banks,
Yeah.
right?
They're
These
in the
Yeah.
resale. Banks have sold direct forever. And then, I mean, for all the rest of us, right, not sitting at a bank, I can't even imagine not having even some referral partners or some resellers, some kind of channel partners. And you've got commercial clients walking in the door that are you have a close relationship with that are just built and ready to go to be those reseller channel
Yeah.
partners. It's outstanding. And to your point, then the bank can focus on reg compliance and kind of the legal side of the world and let somebody else handle all the cost of the sales and the marketing and customer support and everything else. Those are the tough areas, right?
Yeah.
Yeah, yeah.
I
I mean,
mean, Darin, I mean,
we've
one
got
of the
some.
things, yeah, I was
Yeah,
going to say one of the things we're really excited about is we think we have an opportunity on the commercial credit side and kind of accounting, AR control, spending control stuff. Go ahead, Darin.
yeah. We're partnering with a friend of mine that was also an investor in Pomelo. That we're going to be building into our Chisel core the ability to brand and roll out expense management and corporate cards through banking, and we're going to own that process where it's a plug and play. We can still put it in your environment. If you're a payroll card provider, offer that out to all your employers. You know, not just lending, but even spend control. You can put it into a debit card if you wanted to. But it's coming, and it's coming soon, and it's going to be brandable, completely customizable, white labeled, and backed in the experience that we've got. I mean, 6-7 years at GE Capital Financial Bank, we did nothing but corporate cards, and we had patents and everything from rolling partial offs. We practically invented that whole process, and going down that path, and we're taking all those experiences and building it into this that's going to be rolling out in Chisel Core. We expect to have that live in about 3 months.
Awesome. I gotta say, man, the payroll side is real interesting. I think all the, business debit, that whole side of the world and the interchange you can get is really interesting. And I think compelling for the business too. I did the back of the napkin just on our shop one time, and it was like the amount of interchange that we could make if we did everything on a payroll card is like pretty much a head count.
Yeah.
Like, wow.
Yeah,
So there's a lot there to play with.
yeah. The corporate cards and the corporate credit cards, those are the highest interchange you can
Big
get.
time. Yeah, I love
Yeah.
it.
Yeah, the other thing we like to say is we're not a software as a service, we're a software as a relationship.
Mhm.
So we differentiate by putting it in the environment of the company that is responsible to the bank, and we run it for them, right? So we're still a software as a service, but our relationship with that partner is much deeper, and the banks trust it more because they are contracting directly with that company,
You
right?
bet. Yeah,
So
ultimately, we needed a way to have direct relationships. But to be fair to kind of the middleware mess that happened, there does need to be a party, right?
Yeah.
The
sure,
between
sure,
the two, there has to be some expertise, there has to be some oversight and some technology, right? I'm a big believer, and we're starting to see all sorts of different evolutions. And I'm as agnostic as can be as to who, what, where. That could be some of the core providers are doing things. All the best luck to them, right? Same
yeah,
with 15 other examples. But I do think that there needs to be a party to sit between. It just works better for everybody. But
yeah.
traditionally, that's been a program manager, man. And I really just think we needed to evolve that space.
And that's what we've done. We've built our own and program managed, and we are. Somebody called us the Sherpas of the industry, and at first I was like, well, we don't just consult, we build, right? But if you think about what a Sherpa does, they guide you. We're the ultimate launchpad because we'll guide you all the way through the process. Why? Because we know everybody in that process. We are well respected, but we also, when we get to camp, we're building your camp.
Yes.
We'll build it for you. We know what's going to work and not work. You're not going to freeze. You're not going to overheat, et cetera. And then we will get you to your destination and ensure that success. And so it grew on me a little bit, right?
I love it. I love it.
So,
Darin, give us final thoughts, man.
final thoughts. I think we really capitalized on watching that middleware. I don't like to call it a debacle. I like to call it learnings because we watched it go down, knowing that we didn't really understand the model, right? You're going to bring on people. They don't own the relationship with the bank or the processor. You do. So you got to keep them to survive. And if they grow, they outgrow you. And they need to go direct to the bank and the processor. And so you're going to lose the winners, right? And then you're going to retain the losers that are just paying minimums and don't grow. And I never computed that model. And so we said, why are we not doing that on their turf so that they directly partner and they are responsible and we are the ones that help them succeed with that responsibility.
I love it. Outstanding, man. Guys, I enjoyed it so much. I knew that I would. We're keeping a close eye on everything you guys are up to, and we're in your corner, man. Look forward to talking again. Thanks for coming to see us.
We appreciate you guys. And again,
Thank you,
offline,
Darin.
we got some
Thanks,
things
man.
to talk about.
Yeah, we need to get out to Texas, don't we, Darin?
Absolutely.
I'll have a cold beer waiting for you.
I'm ready. I'm ready.
We'll see you guys.
guys.
Thank you, guys.
Thanks.